Hello everyone, welcome to MastersTeach. Today we are going to discuss money and banking, which is part of your Telangana TET Social examination. So it is the eighth social studies content. Okay, we'll discuss about the money, banking system, deposit, loans, digital transaction, financial literacy. So it is all related to your Telangana TET examination. If you are newly watching my channel, please do subscribe and share with your friends. This is the only channel which gives entire content in English medium for the benefit of the uh, aspiring students. Okay, what we'll cover today? We'll cover barter system and its limitation, then evaluation of money, commercial banking and deposits, checks, demand drafts, then we'll discuss about the credit. Okay, so these are the things, and also we'll discuss uh, internet banking, financial literacy, so digital tools like NEFT, RTGS, UPI, and safe banking debts. So these are the uh, important points for the examination point of view. I'll go very depth. Okay, so the barter system and its limitation. So what is barter system? Barter system is the direct exchange of goods for goods, so without using any money. For example, a farmer gives rice to a cloth weaver in exchange for fabric. This is the thing. And it is the barter system is the earliest form of trade, so practiced in ancient civilization across the world before the invention of the money. So exchange goods for goods, that is the concept of barter system. Okay, so what is the problem? There is a word called double coincidence of wants. That means the biggest limitation of barter system is the double coincidence of wants. So both the parties must simultaneously uh, want exactly what others he has to offer. For example, shoemaker wants a rice. Okay, he must find a farmer who not only has the rice but also specific needs of shoes. So this makes extremely difficult and inefficient. So uh, other limitation is that you cannot lack of divisibility or no way to store value, so difficult to deferred payments. That's the thing. So this is a double coincidence of wants. That means so both the parties must have similar wants and similar exchange things to offer. That is the thing. This is the biggest limitation of double coincidence of wants. So the barter system and double coincidence of wants. Okay, remember this. And how the money is started. Okay, we'll discuss from the beginning to till now what has happened. So initially there is a commodity exchange. So we used to exchange, like commodity means for the exchange we use shells, cattle, grains, cloth used for medium of exchange. Then the second thing is metallic money, so gold, silver and copper coins. So it is durable and universally accepted. Then it comes to third phase is the paper money, so currency note issued by the central banks. It is a lightweight and convenient to carry. Then plastic money and digital money, so we use debit card, credit cards, okay, UPI, okay, and net banking for the cashless transactions. So money act as a standard medium of exchange, so completely eliminate the need of double coincidence of wants. So we already discussed what is double coincidence of wants. Means both the people want to have exchange the what they want. That is the thing. And it also serves as a unit of account and store value. The money has the serves as a unit of account and store value is there. So these are the evaluation of money, commodity money, metallic money, then paper money, plastic and digital money. So how the banks got emergence, how the banks got started. So it is started with the goldsmith to modern banking. So these are the things I have taken from the your textbooks of Telangana SCRT books. So goldsmith era. So wealthy individuals store gold and valuable with the goldsmith for safekeeping. Goldsmith issued the receipt as a proof of deposit. Then second thing, receipt as a currency. So over a time, whatever these receipts given by the goldsmith, so worked as a uh, like these risks began to circulate as a form of payment, the earliest form of paper money and banking. Then lending begins. So Goldsmith realized that not only deposit withdrawals at the same time, so they began to lending a portion of deposits and charging for the interest. Then modern banking. So it is a formal banking institution started. So it is well regulated. It has the license serving both individuals and business at the national scale. These are the emergency of banks from Goldsmith to modern banking. Then commercial banking and functions. What is commercial banking? So commercial banking is a financial institution that accepts the deposits from the public and provides the loan to the individual for business. So it is profit oriented and regulated by the Reserve Bank of India. So many times the commercial banks is regulated by whom? The Reserve Bank of India. So what is the primary function? So they take the uh, accept deposits, savings, current account, then fixed deposit, recurring account. They take the money from the public, then lending the money. So whatever the money they have taken from the public, and they also give to the needy people. So lending money. So personal loans, business loans, home loans, education loans, etc. Then agency services for the bill payment, fund transferring, government collections, etc. Then general utility. So the function of the banks is they have the lockers, so people can store their valuables like gold, silver, and different ornaments and precious stones. Then they also work as a foreign exchange, and they issue the debit and credit cards. These are the primary functions of commercial banks. So if you see right hand side, accepting deposits, and they also give the loans. Then payment services. Payment services include the checks, draft, NEFT, RTGS, and UPI. Then types of bank deposits. Okay, so you should aware of the uh, deposit types. So many times they ask in the examination, even though it is very simple, but it is a small reminder for you. So saving banks account, current account, fixed deposit, recurring deposit. So what is the who is the primary users of uh, a saving bank account? Salary individuals and households, whereas current account used by the businessmen and traders. Then it is a fixed deposit. It's the investors who have the good amount, they will keep it in the money for a certain time. Okay. Then recurring deposits is a uh, regular monthly savers. Okay. Then withdraw. So the saving bank account very limited per month. You cannot withdraw any number of times. If you withdraw more number of times, then they will be charged. Then current account, so you can withdraw unlimited times. So overdraft facilities available. Fixed deposit, so fixed deposit can be withdrawn at maturity, as well as pre-withdrawal also acceptable. So recurring deposit only at the maturity. The interest rate for the saving bank account, it lies 3 to 4%, whereas current account, no interest is paid or very low. So this is the important point. So fixed deposits, it may earn 5 to 7%. Okay, it is depend on the like time and all the stuff. Then moderate to high. Recurring deposit to have the minimum to maximum rate of interest. Then deposit style. So in saving bank account you can deposit anytime, in current account at any time. So but fixed deposit you have to deposit at lump sum at a once. Then Recurring deposit is a fixed monthly installment. So uh, examination tips. So the current account is primarily used by the businessman for the high volume transactions. So there is no interest on current account, but they have the facility of overdraft. These are types of bank deposits. Then checks and drops. So what is check? Check is a written order issued by a bank account holder direct to the bank to pay the specific money to a named person on entity. So it is drawn on the payer's own bank account. So the check can be dishonored, that means bounced, if the funds is not in the account. So it can be paid at demand at any branch. So the types of checks: bearer check, order check, cross check. Then demand drafts. So demand draft is the prepaid negotiable instrument issued by the on the behalf of the customer. So this is also important. Bank collect the amount in advance before issuing the DD. For example, it cannot be bonds. Payment is guaranteed because we pay first, then the bank issue the demand draft. So it's commonly used for the admission time or government fees issued by the bank itself, not to the individual. Slightly more secure than regular check. So you should remember, a check can bounce due to insufficient funds. A demand draft cannot bounce because the amount is collected up front of the bank. You should remember. Not only listen this class, you have to make the notes. That will be good habit, and it is a form of revision also. So loans, interest, interest rates, and credit. So how the bank use deposit to lend. So bank collect from the public. The amount is collected from the public and use large portion of those funds which is collected from the public to give loans to individual farmers, businessmen. Okay. So this process channel saves to productive investment. So some people save, some people will take the loan. So rate of interest mechanism. So bank charge higher interest rate on loans, then they pay on the deposit. So on the deposit they pay very less interest, whereas they charge more interest on the higher in the loans. So the difference called interest spread. So is the bank's primary and source of income. So deposit rate paid to savers 3 to 6%, whereas lending rate charged to borrowers 8 to 14%. So role of credit in economic development. So credit enable the farmers to buy seeds. So through credit, what happens? Farmers can buy the seeds. Business people run their business or expand. The student pursue higher education. So it is a driver of economic growth. So what is debt trap warning? So if the people are borrow money behind their repayment capacity, that is a debt trap. So where person keeps a borrow to repay earlier loans, sinking deeper into debt. This is a critical and social economic problem highlighted in the syllabus. So debt trap means you have already taken the loan. In order to repay that loan, again you are going to take the loan. So this is a vicious circle. So this is called as debt trap. Okay, you should remember. Then internet banking and digital transaction. So internet banking also called as online banking or net banking. So where they can do the financial transaction anytime, anywhere, without visiting any branch. Simply you can do your banking wherever you there. So there are three concepts here you have to remember: NEFT, RTGS, UPI. What is NEST? It is a national electronic fund transfer. So it set the bank settle uh, like transaction batches at scheduled interval. It is available 24 into 7. In order to transfer the bulk amount, we use the NCFT, which is available at the branch. Then RTGS. Okay. So real time gross settlement. So large volume of money, like it may be 2 lakhs, 3 lakhs, or 1 crore also. At a time, you can transfer through RTGS. So the minimum is 2 lakhs in RTGS, and in NEFT there is no minimum uh, amount required, whereas UPI, unified payment interface, so everybody using Google Pay, Phone Pay. Okay, so this is the thing. So it is a virtual, every mobile has a virtual payment address, VPA. So no bank details is required. Even if you have your mobile number which is connected to the bank, you can simply transfer. So remember the abbreviations, and you should know what exactly it is, so that will benefit to score more in your exams. So we'll discuss about the difference between RTGS, NEFT, and UPI. So what is the full form of NEFT? National Electronic Fund Transfer, whereas RTGS, real time gross settlement, whereas UPI, Unified Payments Interface. So take the notes, that will be good habit. And settlement batch wise near real time. If some amount is there, so for example 1 crore cannot be transferred at a time, so first 25 lakhs first, second 25,000 next, like that. Batch wise real time transfer is there. And whereas RTGS, the same time real time transferred one by one. UPI is the instant one. So minimum amount for NEFT transfer is a no minimum required, whereas RTGS minimum 2 lakhs has to be used, and for UPI you can transfer n amount. So best for the NEFT small to medium traders transfer, whereas RTGS is the large value transfers. Mobile is everyday mobile payments. So platforms for the NEFT, you can use the net banking or you have to visit the branch banking, whereas RTGS also the same thing. So in order to have RTGS, go to bank, or you can do through online. Then UPI, it can be done through mobile app like Phone Pay, Google Pay, and etc. So exam point of view, you have to remember RTGS, real time uh, transfer, you have to use for the high value, minimum 2 lakhs. So NEFT and UPI has no minimum transfer time. So financial literacy, what is financial literacy? Financial literacy is the ability to understand, effectively manage, like you should know how to manage financial things, resources, including how to earn the money, how to save the money, how to invest the money, how to borrow money, how to spend money wisely and safely. So financial literate person can make have the good information. They have the budgeting, they have the insurance, loans, along a long term wealth creation. So why it's matter? So if you know about the financial literacy, you can avoid debt trap, we already discussed. Then it encourages the habit of saving money from the early age. Okay, so they use the digital banking money tools. So they are also aware about the financial frauds and cyber scams. So they have the like goal of having the financial independence in the longer run. The safe rule banking, never share your OTP or PIN or password to anyone, not even bank official. So fraudsters often impersonate that they are bank employees. This is about the financial literacy. Okay, if you like my content, do try and share and like the same. Okay, so what we are discussed, we discussed about the barter system. So direct exchange for goods, so without using money, limited by double coincidence of wants. So the commercial bank, it is a profit oriented bank that accept the deposits from the people and provide the loans to the others. It is regulated by the RBI. Whereas demand draft, it is a prepaid instrument issued by the bank. It is guaranteed and cannot bounce, unlike check. So debt trap means what? A situation where borrower repeatedly takes a new loan to repay the older one, so leading to spiraling cycle debt. You should remember, this is the important point. Then financial literacy, so what is that? You should know this, have the knowledge about the how to earn, how to manage, how to invest, and how to save the money effectively and safely. This is a and one more thing, this infographic, if you want to, you can take the screenshot of this one, how the barter system is there. See, good here grains for cloth, and this for growth, grains for grain, like that is a goods exchange. So limited by double coincidence. Then evaluation of the next. So first it was the barter system. Then, like, initially they use the commodity, then they use the metallic money, they use the paper money. Now they are using a digital money. The commercial banks, so what they does, it is gone by the RBI, so accepted deposits and provide loan to the uh, loans. It is regulated by RBI. Types of deposits: saving account, saving deposits, current account, then saving account, current account, fixed deposit, and recurring deposit. Okay. Then payment instrument: so check, NEFT, RTGS, UPI. The financial literacy: so save wisely, avoid fraud, so debt trap. So all these things you should know, so that if you know this, you can attempt easily. So remember the what is the core problems of barter system. You should know the types of deposits. You should know check versus deposit. Then RTGS, high value instant. These are the small presentation from MastersTeach. Okay, do subscribe my channel. You can also download MastersTeach app, where you can have this particular PPT. Okay, you can read and take the printout also. Okay, download MastersTeach. With minimum price, you can have this beautiful content that will be helpful to you. So we'll see you tomorrow, same time. Keep watching and keep sharing, keep liking the same. Thank you. All the best for your examination.